How's it going, everybody? It's Stas here, and in today's video, we're going to be talking about and breaking down the top stocks and the top ETFs that I'm watching and that I'm looking to trade heading into this week in the stock market. And I also want to go over with you all what the futures are looking like right now, the S&P, the Dow, and the NASDAQ futures. And I want to talk about a couple companies here that are reporting earnings in this upcoming week. A bunch of financials and a bunch of airlines are reporting, and it's going to be interesting to see kind of what their numbers are looking like, especially with this impact of the global crisis that is currently going on right now. And in general, guys, I'm going to be sharing with you all some thoughts in this video on the economy, on the market, and kind of what the bulls have going for them and kind of what the bears have going for them right now in this current time period. So if you guys enjoyed the video, hit that like button for me, consider subscribing to the channel, and don't forget down below in the description box, you can get 2 free stocks from Webull valued up to $1,400 with a deposit of $100 into the account. And you can also join our Discord chat and our Facebook group, and those platforms are free of charge. So get in there, interact with us. We'd love to have you in there. So let's go over what is going on right now in the market. The S&P last week, we did have Friday off for Good Friday. So in the 4 days last week, we had a ridiculous day, right? And let's just throw in this April 3rd day just for the heck of it. So from April 3rd up to April 9th, the market went from 24.50 up to 28.20. That is a move of 12% from bottom to top. So what is pushing this market? What do the bulls have going for them right now? Well, they have the Fed. A lot of people say don't fight the Fed. The Fed's putting a lot of money into the market right now. Unlimited quantitative easing. They're buying bonds. They're buying junk bonds now. They're bailing out a bunch of these companies to try and keep the economy afloat, and in turn, this pushes the stock market up. So we have that going for the bulls now. That's kind of a positive there. Another thing that you can argue is this oil deal. This oil deal is good for the bulls, right? It's good for the bulls in my opinion, because we saw when the price of oil initially dropped aggressively about a couple weeks ago, the market followed along with it for that first day. So this could be another reason why the market is pushing up here. And the third reason that I could think of is the market is pricing in the economy reopening and us going back to normal, right? Us going back to normal, jobs coming back, workers going back to work, people spending, people consuming like they did before. And in my opinion, if anything goes sour in terms of that third one, that could be a reason why the market tanks. And by that I mean, let's say the lockdown gets pushed back further, the economy doesn't get opened in a timely fashion as President Trump wants. You know, this could end up pushing the market down in the short term. And honestly, there's a lot of things that could happen. Nobody knows what's going to happen. There's just so many different things that could happen. All we can do is kind of view each side in terms of the bullish side and the bearish side, and kind of all different perspectives with a clear head, and then make your own perspective. That's all we can do at this point. So the S&P's been doing great. Those are some kind of reasons why it's moving up and what the bulls have going for them at this point in time. And when we take a look at the ES, the E-mini S&P futures, they actually gapped down about 1% today, down actually a little bit more earlier. It was down about 1.2%. And at this point, heading into tomorrow, guys, what I'm looking for is to see, do we hold this little uptrend on the 5-day, 5-minute on the ES, right? If we do and we end up gapping up to, let's say, 2,800 tomorrow, obviously that could signal a green day tomorrow, the continuation of the uptrend, especially if the futures are kind of closing that gap heading into the open market tomorrow. That's going to be a sign that we're pushing up. We may be going long on some stocks tomorrow. But let's say the ES breaks this trend. We start to test 2,700. We break that. We start to go into the 2,600 territory. That could mean hey, maybe we push a little bit red further tomorrow. Maybe we see even a red day tomorrow. So these are some technicals, basic technicals that I'm watching here on the the E-mini S&P futures. And you may be asking yourself, Stas, what do the bears have for them? Well, the bears have a lot of data on their side right now. The bears do. 17 million jobless claims. That's 10% of the workforce filed for jobless claims in the past 3 weeks. So the bears are arguing, hey, people are getting laid off. People are not in a financial spot, many of them, to go out and spend money now. So this is going to bring down the economy over time, right? It's going to be kind of a lagged effect that is going to, take a couple of years, 1 or 2, 3 years, whatever, right? This is what the bears are thinking. They also have, the argument that we're in a 12-year bull run. We were just in a 12-year bull run. So you're going to tell me that the market's going to rally for 12 years, a bull run 12 years, and then the bear market crash is only going to be 1 month? I mean, that doesn't make sense. So a lot of these bears are thinking this is simply kind of the first drop in the bear market, and we're seeing the first little correction in a bear market, which if we see previous bear markets, we always see these kind of relief rallies, right? And this, in my opinion, is considered a relief rally. Could I be wrong? Yes. Could I be right? It's a possibility as well. But this is what the bears are thinking at the end of the day. And when we're taking a look at the NASDAQ here, this is down 1% right now, just like the S&P, down about $80. And the Dow Jones futures, they're down about 0.95, close to 1%, down 220 points. So in general, I'm looking at this uptrend on the 5-day, 5-minute. Will it hold heading into tomorrow? If it does on the Dow, NASDAQ, S&P, we may see a green day, a bounce back day. If it breaks, we may see a red day tomorrow. And I'm watching a lot of different stocks that we're going to go over in today's video in a little bit here that could benefit from either scenario. So let me know down below in the comments, what are your thoughts on the markets right now? Where are we headed, the economy? And to talk a little bit about kind of an interesting stat here, I believe it was from JP Morgan Chase. They're now not looking to, give a mortgage to anybody that has less than a 700 credit score. So if you have less than a 700 credit score, you can't get a mortgage from JP Morgan. And by their assets, they're the largest lender here when it comes to the total assets that they have. So pretty much, if you want a mortgage from JP Morgan right now, JP Morgan Chase, you're going to need to have a 700 plus credit score. And also, I forgot to mention this, a 20% down payment. You need at least a 20% down payment. You're not going to be able to do one of these FHA loans or whatever, 3%, 5%, 1% down. You're going to need 20%. You're going to need a 700 credit score, and they're tightening this. This means that they don't want, obviously, a bad, they don't want to, lend out to somebody that might not pay back. They want credible people to lend it to, people that have paid loans and they have a solid credit score. This means that obviously they're not looking to give loans to everybody. And this is interesting because if this starts to hit the housing market, that could be a whole nother beast, because from what I'm seeing, the stock market got hit, but now the housing market is slowly going to get hit. It's starting to get hit, and I see that occurring and kind of maintaining here for the next couple of months. That's where we're going to see the housing market slowly start to fall, in my opinion. And by no means am I an expert in the housing market, but that's kind of what I've gathered here just from doing some research and looking up things and data online. So I'd love to know what your thoughts are on that. Now, let's just jump into some stocks here that are reporting earnings, some companies that are reporting earnings this upcoming week. We just talked about JP Morgan. They're reporting earnings this week, guys. And JP Morgan was up 9% on Thursday. Absolutely insane. This stock's gone from $82 to about $104 in the past couple of trading days. So I'm definitely watching JP Morgan. Delta Airlines, they're also reporting earnings this week. Arguably the best airline, but still at this point, me personally, I wouldn't want to own any airlines. And the truth is, guys, if you think about it, they've lost so much business to the point that the stock at this point, a lot of people would argue, oh, the stock's undervalued, but honestly, it just kind of repriced itself to what the company is worth right now. So in essence, it didn't really get cheap because the revenue came down with the stock price. It's different if the stock price came down, but the revenue and the EPS stayed the same. That would be, oh my God, I got to buy that stock. But the revenue, the EPS, everything came down. The stock came down. At least right now, even if the revenue loss is temporary, which it is, but it's probably going to last a couple months here, maybe even half a year, whatever. Either way, it's really not that great of a value quite yet, in my opinion. And we're seeing a lot of big names actually sell out of these airline stocks, like Warren Buffett. Warren Buffett sold out of, I believe, Delta, not his whole position, but he sold out a good amount of Delta, Southwest, and I believe it was United Airlines or American Airlines, one of those two. And speaking of United Airlines, UAL, they're also reporting earnings this upcoming week. They were up almost 15% on Thursday, which is crazy. Another bank is Wells Fargo. I own this in my M1 account. I'm getting killed on my position, but they are reporting earnings tomorrow, and not tomorrow, this week. And another big company, healthcare giant, is Johnson & Johnson, ticker symbol JNJ. This, in my opinion, is one of the safest stocks in the stock market. You guys know that, which is why I have a pretty nice position in all of my long-term accounts. My Roth IRA and my M1 account, I have a pretty solid position for Johnson & Johnson, and I do expect this company to continue to be a beast for years to come. BAC is another one that's reporting, Bank of America, this upcoming week. Goldman Sachs, ticker symbol GC, is also reporting. Morgan Stanley is also reporting here this upcoming week. And another interesting one is going to be Abbott, guys. Ticker symbol ABT, Abbott Laboratories. They came out that 5-minute CV test. So I'm curious to see kind of what their numbers are going to be in terms of their financials. Due to them having this test, I'm not sure if it's going to be in their numbers. But either way, I'd like to see what they do and kind of what guidance they give and anything they have to say about what they're doing right now when it comes to the CV and everything. I think ABT could be an interesting player here. So those are a bunch of stocks, a bunch of companies that are reporting. And remember, guys, this is just the beginning. I believe only 30 companies are reporting tomorrow, 30 companies on Tuesday. But when you go to next week's earnings, the week after that, you're going to start getting some days where 300 companies are reporting earnings, 250 companies are reporting earnings. So we're really going to see what is going on with these numbers. And I'm scared, guys. Not scared because I don't trade, I don't invest with emotion, because that could ruin you at the end of the day. But I'm interested, let's put it that way, I'm interested to see kind of how the market reacts to these earnings, to the guidance, right? I know a lot of companies are not giving guidance because they don't even know at the end of the day. They don't even know what the guidance is going to be, or the guidance is so bad that they just don't want to give it because it might spook investors. That's another possible scenario. So let's get into some stocks here that are not reporting, but I'm watching either way. One of them is Square, ticker symbol SQ. This is a company at this point that filled this gap to $65-ish. And if you guys notice, we're trading in a gap right now, in a zone from about $60 to about $65, $66 here on Square. And where did I get that $60 support? Well, a couple months ago, back from August 2019 to about November 2019, you can see Square was really trading in this $60 to $65 range, which honestly makes it even more attractive since it made that move multiple times in that 3-month span from August to November. So I'm looking to see, if we hold $60, guys, this is going to be a pretty simple trade. All I'm looking for is, are we holding 60? Are we pushing to 61? I'll probably put a limit order at $61 for a square, because at that point we know that, at least technically speaking, we're consolidating, we're rallying back up, we're breaking the resistance here from Thursday, and that could be a clear path up to $64-65 where I'd end up selling out. So Square is definitely, when it comes to stocks, the top one I'm watching. Another one I'm watching here is Zoom, ticker symbol ZM. Although many argue that this stock is going to die. It's going to die once this whole craziness is over with the CV. But in the short term, right now, we're still in the craziness, guys. I think there could still be another pop. We're seeing some consolidation on top of this 180 SMA here on the 4-hour chart. That's a good sign that, at least on a macro trend level here, we're holding the uptrend. That's a good sign. And for me, I've mentioned in previous videos, if we break 130, 131 on Zoom, that could be a buy signal. That could be a breakout here, and to the point where we may be rallying back, maybe not to 175. That's a bit extreme, but if we break 130, I could definitely see us getting to 140 in the short term, maybe 145. That's kind of what I'm looking for here with Zoom. And another interesting one that's on the verge of breakout is Shopify. And honestly, guys, a lot of these stocks kind of rely on the overall markets doing well. So if we do dump off tomorrow, which is a possibility, a lot of these stocks, probably all of them, maybe there will be an outlier, but a lot of them are going to follow the market and be red as well, which in that case, I probably won't trade any of them. If anything, I'll play a put option short term or maybe short the stock, but probably not. But either way, we'll see what happens, what direction the market ends up picking. But Shopify here, I think if we could break, you guys see the resistance here at about 440 from a couple days ago. If we break 440 and this overall downtrend, this downtrend of lower highs here and this 180 SMA resistance, I'm thinking from 440, we could fill the gap up to maybe 455. That is a tradable range here for Shopify, to the point where we can maybe grab not a crazy gain, but still about 2 to 3% profit in that move. So Shopify, definitely watching it. We already went over J&J. No need to go over that one again. CCL is one, guys, that is quite interesting. Take a look at what's going on here in CCL. We double bottomed here at about $7, $7.50 to about $8. We got that double bottom, and on Thursday we closed under this resistance at about $13.90 to about $14. And take a look, guys, at what happened with CCL. This thing got rejected right at $13.80, right at the level that we failed at on the 20th of March and on the 31st of March. So I'm thinking if we get a massive gap up in CCL, we could see another run. I'm not sure if it's going to be 20% like we saw last week. We saw, I believe, 2 days where this thing was up 20% one day, 20% the next day. I don't know if we'll get that, but I can see a little run from $13.80 maybe to, let's say, $15, $16, and your guys are probably like, Stas is crazy. That's a little run. Well, in this case, with CCL, how it's been moving, that is a little run, honestly, from $14 up to, 16, that's only 15%. I can see it doing that. Heck, it could even do that in one day. Again, we saw last week it was up 40% in the span of 2 days. Like, this stock, it's just crazy, right? It goes up at no mercy. And another one that's kind of interesting here is ticker symbol SPCE, Virgin Galactic. Virgin Galactic, kind of like CCL, it failed to close above a critical resistance on Thursday. It actually failed at this level, $16, 2 times last week. So I'm thinking here, we're getting really close. We're getting in a wedge at this point, between the 50 simple moving average and the $16 resistance on this hourly chart. I'm thinking if we break $16, guys, that's going to be very bullish. In the short term, we may rally up to Thursday's highs at $16.40. That could be a day trade. Or we can even fill the entire gap up to $17, which could end up being a day or two trade, whatever, right? And from $16 to $17.50, which is possible here, mind you, this is a stock that moves very quickly. That's a 10% move from 16 to 17.50. So that's kind of what I'm watching there on ticker symbol SPCE. Let's take a look at natural gas now to start talking about some leveraged ETFs and some ETNs that I'm watching heading into this week. So natural gas futures, I'm looking at the May contracts here. They are currently up about 3 cents, up 1.7%. And breaking down the overall trend here on the 4-hour chart, you guys can see this past week was a very bearish week for natural gas. Actually, no, these past 2 days, we actually had a ridiculous rally from 152 up to about 188. But the fact that we actually didn't break out, we're continuing the downtrend here at a lower high, that is what's very bearish now heading into this week. So for that reason, guys, especially if we break, let's say, into the 160s, for that reason, in this week, I'm looking at DGAS. DGAS, which goes up whenever natural gas is selling off. This is poised to do very well with the technicals, with how the technicals are lined up right now with natural gas. So that's kind of what I'm watching there. This week, I'm also watching GLD. I locked in profits on Thursday with GLD, and this actually, if you guys don't know, it's an ETF that tracks gold. It's meant to track the price of gold, so if you don't actually have physical gold and you want to trade something that tracks gold, GLD is very, very solid. And to be honest, guys, I'm in the mindset right now, kind of what I've been thinking about is maybe buying some calls on GLD. I'm not sure exactly which ones I'm going to buy. Probably ones that are in, I was thinking September, maybe the January 2021 calls. I'm looking to buy long calls. And I'll let you guys know. Let me take a sip real quick here. I'll let you guys know exactly what I do end up doing. But either way, I'm in the camp that in the short term here with all the QE, all this money printing, I think gold is going to do good. You know, I'm in the camp that, and I've said this on the videos, that gold has a very good chance of getting to 1,800, 1,900, 2,000. And in that case, you know, GLD, we could be seeing a price at 170 in the future, 180. So I'm really looking to capitalize on that. And what better way than buying some calls, having that kind of leveraged position in GLD in the future. That's kind of what I'm leaning towards here. And of course, I'll probably be day trading it as well with shares, swing trading it with shares. But having that longer term option exposure, I think at this point is pretty smart, right? And another thing is SLV, another ETF. This is one that is very similar to GLD, but it tracks silver /SI, and the price of silver has been on a kick. It's gone from 1164. Guys, take a look. In the middle of March, less than a month ago, it was $11.64. Now it's at almost $16 an ounce. That is insane. That is a move of about 25%. You can't make this up. And a move of 25% in a commodity like silver is ridiculous. And SLV, again, kind of like GLD, it tracks the price of silver. And am I looking to buy long calls on SLV? Probably not, more GLD, but I'm looking to trade it regardless. Swing trade it, day trade it. I think there is a lot of potential here. And who knows, I might end up buying some long calls on SLV. We'll end up seeing what happens there. And before we wrap up the video, let's take a look at what crude oil is doing right now. Oh, wow. It's not really doing much. It's up 26 cents right now, up 1.19%. But you can see here kind of the bearish trend that we're seeing on this 4-hour chart. We failed to break out of the 180 SMA. You know, we dumped down now to about $23, and we're fighting at 23. I think if we break this support, we'll probably test the lows here, despite the deal cutting about 10 million barrels per day. the price is still going down. And we all know this is affecting many, if not all, U.S. oil producers. They need the price of oil, these U.S. companies, they need the price of oil to be $30 a barrel, higher. They need the price higher in order for their businesses to operate. So that is kind of why in the longer term, oil prices are going to get back up, guys, because you have to realize many companies, they can't do business with oil prices down here, $10 a barrel, $15 a barrel, $20 a barrel. They need it up to 30, 35, 40, 50. So we're going to see that move sometime in the future. Many people will get rich betting on that move, but the thing is, we don't know when it's going to happen. So if you get the timing right, if you buy a call option, great timing, on whatever, USO, some of these companies, oil companies, you can make a lot of money. But if you get the timing wrong, you can lose a lot of money. So at the end of the day, it's all about timing with everything, honestly, guys, when it comes to the stock market. So let's take a look before we wrap up what the market futures are doing now. We're actually down to about 1.3%. So it seems like this trend is going to retest itself. So I'm looking to see what happens there, like I said earlier. So overall, guys, that's pretty much it for today's video. We went over everything that I wanted to talk about. So if you guys did enjoy the video, hit that like button and feel free to share any thoughts you have down below. If you disagree with me with anything I said, please share your thoughts down below in the comments. If you agree, share your thoughts down below. And honestly, just let me know any thoughts you have about the markets, stocks you're buying, selling, if you're in cash, if you're in Bitcoin, gold. I'd love to know your thoughts. And don't forget, claim your 2 free stocks from Webull. They're valued up to $1,400. All you need to do is deposit $100 into the account, and that is linked down below in the description box. So I'll catch you all in the next video. Thanks again for watching. As always, thanks for the support, guys. Peace out.